One.
I got some good news and I got some bad news. The good news is that we're on a 7-day winning streak in the S&P, and right now we're working on 8. The bad news, it was in November of 2021, and we know what happened in 2022. We got stocks moving big in both directions, up and down. We'll cover them. We'll talk to Jeremy Schwartz at 8:35 for WisdomTree, get his take on the markets, and we'll debate what Fed speak will be today. It's Wednesday, and it's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin
This is a volatile puppy here, isn't it?
and Dennis Dick,
I'm bidding a penny. I'd buy that stock for a penny.
with everything you need to start your trading day.
Welcome, traders and investors. We are in the green by 4.25 handles at 4,400. Nice range overnight, 13 handle range. The buck is up 22 cents at 105.59. Bonds bouncing back up almost a half a point, 114.11, 30 seconds. Crude is not going to $100, folks. It's down $1.26 at 76.10. Gold slipping from the 2K level down 280 at 1977. Silver in the red, just by a couple pennies, 22.57. In Bitcoin, residing in the 35K handle, down $435 at 35,715. Let's bring on Triple D here. Triple D, 7-day rally, and we're working on 8. What are you seeing out there?
S&P is working on a 7-day rally, not the same in the other markets, but we know the S&P is, what everybody looks at. So yeah, it's been an unbelievable bounce. We were oversold, and just like Derek said yesterday, we have went from oversold to overbought, just like that. I don't remember the last time I saw it go that quickly either, to go from oversold to overbought, but that is exactly what has occurred. It's hard to chase here now. I did buy a couple stocks more in the long-term portfolio yesterday. Trying to remember actually what I did. I bought that SMCI. I wanted to get back in that super microcomputer. So in the long-term portfolio, I put that back in. I'm just building myself up because I think AI is for real. And, that a few of these stocks, not going half-size positions, just, nibbling into stuff here. Just like NVIDIA was a half-size position, SMCI half-size position too. Nibbling into stuff. Don't want to go full on bull because I still think, there's tougher times ahead. But I also think that there's going to be this market here in 2024 that is going to still have this bifurcation where you see some stocks which, have higher debt loads, probably not doing as well. And AI stocks maybe still continuing to hold up.
Yeah, seasonality coming into effect too, right? You have Black Friday coming up, or everyone's just going to be out there buying. You have the holiday season coming up with Christmas, so the seasonality is working in the market's favor.
I think short term, we're both still
yeah,
in control for sure.
yeah, earnings season. Everyone was looking for disasters, maybe a warning from the Big Seven. Nothing but buy the dip, and Apple here up, up over 180, recovering all the losses. Remember when they had the problems with the iPhones in China being banned at work? So just a lot of things. We got through earnings season. I guess the next turn, I'll have to look it up, will be those inflation numbers, and we're looking at crude. Now, crude is residing in the 76 handle, but when they take those readings from a month ago, boom. But the other thing too, there's Fed speak today, and once again, everyone took his comments as very, very dovish, and I think he's just kind of been the same. So we have him speaking. We have a couple other Fed speakers today. So keep your eye on the wire. There'll definitely be some moves on that. But earnings season continues. None of the big boys, but once again, stocks up big, stocks down big. Let's start with Take Two Interactive. Let's bring in Mitch. Mitch, give me the numbers on Take Two.
They did not report earnings, Joel.
Oh, I mean the Grand Theft Auto. Yeah.
Yeah. So let's get to, of course,
Take-Two actually reports tonight.
Yeah, they report tonight. Rockstar's highly anticipated game, of course, Grand Theft Auto 6, expected to be announced later this week. Of course, Grand Theft Auto 5 proved runway success, selling over 185 million copies, only trailing Minecraft as the best-selling game of all time. Of course, I can tell you right now, guys, even as I get older and older, I'll still play some Grand Theft Auto 6. What I'm waiting to hear, though, and a lot of people were this is speculation, but they wanted to see if potentially Grand Theft Auto 6 could be moved to like VR, like the Oculus or something like that. If that happens, I'll tell you right now, that's a big move. So just putting a little speculation out there. There's no confirm that it would switch over to the Oculus, but just the anticipation of Grand Theft Auto coming out is enough here to get Take-Two moving, and they do have earnings tonight.
Amazingly, the moves in these stocks off the games. Like, I mean, you're up for $13 because they're moving up the release of the game, correct? Is that what it is? Moving up the release of it?
Well, we didn't have an expected date.
Okay,
so
now we got an expected date.
Yeah, so now it's going to be announced later this week. We still don't know the exact date that it's coming out.
Yeah.
But we're told that the date will be released later this week.
And then, so boom, we get the 13-point pop. I would normally say just fade this stuff, but it hasn't been the market to fade for the last few days. The stocks that gap up go higher, aka data dog, gaps up, 96 continues to go. Bulls are in complete control here. It makes shorting tougher. Even the stocks that are coming in, they're still by the dip demand. People really believe, this is it. Like we saw the bottom and just blast off to all-time highs. It could happen. I can't believe we blasted off, as much as we did. I thought we were oversold. I thought we'd get a bounce. Just didn't think this much this fast. So obviously, I've been looking for laggard stocks that haven't gone yet. SMCI hadn't gone yet. Another one that I am watching here, which is trading crazy right now, is Unity. That must be off of the Roblox, which just came out. But that hasn't really gone yet either. So I am looking at the laggard trade here. Has been working so far. Jump back over to Take-Two, though. It's a big move. Joel, give us some levels here. 149 in the pre-market.
Yeah. Nice round number. 149.43 is your pre-market high. But let's go back to your August high, your early August high. Came in at just under 150. So you got to think about that. That's only 70, 80 cents away. And a little gap to fill above that to 151.61. But as we saw with the dog yesterday, now the data dog move, was off earnings. As you said, this is moving the date of Grand Theft Auto, which I don't know. Have you ever played that, Dennis? Have you ever played Grand Theft Auto?
I'm still stuck on Nintendo. We play as Nintendo. We're still playing my old Wii is what we broke out. So I play with the kids.
This is the original metaverse.
What's that?
This is the original metaverse.
Yeah,
if you think about it. And in the long run, I think you'll see more and more games like Grand Theft Auto. I'll tell you right now, it's highly addictive too.
Gaming's not going away. Gaming has been here. I play every day with my kids.
In the chat, let us know if you
play Super Mario Wii every single day. So I mean, it's fun. I like the games too. Grand Theft Auto is a little bit violent for my kids at this point in time. Do I play it later on when they're teenagers? I don't know, maybe. Yeah,
just might be a little bit.
But that gaming is not going away. The games are going to get cooler and cooler. The metaverse, all of that tied into it. So I mean, I think there's a play here for to be long video games long term at reasonable valuations.
Let's go quickly to Corsair Gaming just to bring another gaming stock in here, and then we'll wrap up the gaming talk. Corsair Gaming Q3 EPS here at 13 cents in line. Revenues at 363.193 million, beat the 347.355 million estimate. They do see fiscal year 23 revenues at 1.4 billion to 1.5 billion versus a 1.47 billion estimate. And net revenues were up here, an increase of 16.5%. They did release a new SCUF Envision Pro wireless gaming controller for the PC. I did see it was sold out on Best Buy. You could still get it on the website, but that's a good sign, right? Seeing their products being sold out there, high demand. Of course, Corsair Gaming owns also Elgato, and that's probably one of the highest used for streaming stuff. I mean, I have 2 of their products right in front of me. So just to put that in perspective.
There's a laggard for you, folks.
Oh my gosh, is this ever a laggard? But you know what? It's a hated stock.
Yeah.
It's just for whatever reason never gets the name, never gets the love. Like you think of gaming and you think Take-Two, EA, Activision Blizzard, obviously gone. Those are the big 3. And then you got other gaming like Roblox, which we'll talk in a second because they just had earnings and it's tied into the gaming. But
Yeah,
I don't even think of Corsair, and I don't think the market thinks of Corsair. And I don't know if the market's ever going to think of Corsair. So it's hard to just get on this CRSR laggard trade, but it's a laggard.
Low of the move is in jeopardy. Was actually taken out here, I think, in the pre-market, right? 1234 was the prior low in November. You got down to 12 even in pre-market trading, and then maybe put a little warning that if this ever puts a string of closes above 13, then maybe you're buying it on strength. But right here, you're just trying to pick a bottom, and we know what happens when you try and do that.
Let's go to those Roblox earnings because they
let's get to that Roblox
right at the top
earnings
of the hour.
there.
And it is popping, man.
Yeah, Q3 EPS, he had a loss of 45 cents, beats the loss of 50-cent estimate. Bookings at 839.45 million. Q3 revenue was at 713.2 million, up 38% year over year. Bookings up 20% year over year. And daily active users also up 20% year over year at 70.2 million. So this is my thing about Roblox is that it's a one product stock. And that always concerns me with one product stocks. What I mean by one product stocks is that they have one game, right? It's not like they make like 5 different games. Like let's say Take-Two, they have multiple titles under their belt. That's my concern with investing in this kind of company.
Nice pop.
You gotta
Investors
think it's
are
easy
liking
for them
it.
to come up with more games, though. I mean,
but they
it's
haven't
got
yet,
the huge name. People talk about it. I'm not sure this is the one I would invest in either, Mitch. So I'm kind of with you there. It's obviously got the love. It's got the name out there. People think about it and they do. This is a Wall Street darling from back in the 2020, 2021 area when obviously stocks were just blowing away. $141 all-time high. I don't think it ever gets there again. Market cap on this thing, which is always a good exercise, and we'll get to Joel's technicals in a second, but just to get a feel for what the size of this company is. You can't look at the dollar shares price, look at what the feel is by looking at the market cap. I mean, we got a $21 billion company here. Take-Two is a monster, just comparatively speaking. Take-Two, oh my gosh, Take-Two is only worth $23 billion. Take-Two's $23 billion and this is $21 billion. Wow, that's crazy. So anyways, it's a no touch for me. That seems crazy that you would pay as much for Roblox as you would for Take-Two. That seems absolutely insane.
You have a candle here. I put a red bar. This is going to be the candle to look at for today. This was a high. We had a high at 40.93. You haven't breached that yet. The psychological $40 level. No, a couple of highs there in that area, but just keep an eye on this bar. It was a bad day. It had a high of 40.93. Tanked that day to 37.61, and then we know what happened after that. I believe this is when they back in August is when they talked about was it changing the fee structure, or the CEO came out and said that. So it's recovered, but 40.93, if that'd be a nice target. Hard to talk about resistance the way these stocks have been running lately, but all of them can't continue to run all day long. Keep an eye on 40.93.
All right, let's go to some of the stocks that got hit here. Upstart Holdings Q3 adjusted EPS loss of 5 cents, misses the loss of 2 cent estimate. Sales of 134.56 million, missed the 140.26 million estimate. Upstart expects Q4 revenues of 135 million and adjusted net income of 14 million. They stated that we're making rapid progress in building the world's first and best AI lending platform. And this was said by their co-founder, CEO. Of course, we prefer to be growing quickly, but this is a time when it'd be wise to operate in a conservative mode.
AI lending.
You like that one, right, Joe? I knew that was going to get your attention.
As Mitch likes to call it, downstar. So, I mean, it's been just an epic disaster since the gentleman on CNBC, which we won't even go into that. But, it's $380 or $400 a share. It's
Yeah.
$20. Stock's down 95% from all-time highs. I'm going to throw out that stat again. Majority of stocks trade down 90% from their all-time highs 10 years later are still down there. So typically these stocks do not come back when they trade over 90% off their highs, meaning they don't go back to the all-time highs. There's always an outlier. There's always an Amazon that got hit during the tech bubble burst and he goes up thousands and thousands of percent. But the majority of those stocks from the tech bubble burst never came back. This is one of those. We had the tech bubble burst, Upstart. I think the stock is never coming back. I don't know if they've got a case here or not. I know a firm was getting hit on this here too. It's just not the kind of stock. Now again, so not the kind of stock I would invest in. They're buying dips on everything. Are they buying the dip on this one? I don't know. Did they come in and buy the dip on this, Joel? I don't want to be the first person here trying to call it.
No, I mean, I wouldn't be shorting it downside. If I shorted it, I'd be shorting it with a really tight leash. You have one number in this area from May 18th at 2156. You did trade below that in the pre-market, right? What did you trade down to? You traded in the pre-market down to 2090. So I'd be more of a buyer in the 20 to 21 range than, a seller here. I mean, this is kind of a short seller's dream here. You got jammed when this was near $30 just yesterday, and now you're picking it up in the lower 20 handle. As far as, buying it for a long-term investment, I don't know, but this kind of feels like down $7.50, one daily low. Yeah.
I'm looking at what money Mitch is highlighting here.
You know I am. I gotta start looking at what the rate is here, and I'm like, okay, yeah, I'll go get a personal loan from Upstart. Yeah, just 5.2% for the best rate that you could possibly get. And then the worst rate, you ready for this one? 35.99%.
Who would put that on their website? Who would put that on their website?
Come on through. I got you.
Come on. Yeah, we'll get you a good rate. 5.99%. That means every year, rule of 72, if you're paying 36%, that means every 2 years your debt doubles.
We got you. Come on down, guys.
I think I got a better name for this company, loanshark.com.
Yeah, might be like what it is. I've talked about this. In the long run, I really do expect regulation to step in against companies like this and against a firm and those kind of companies. The way they target consumers.
MasterCard and Visa. Okay, let's give Upstart a break. MasterCard and Visa's upwards rates are 24, 25%.
That's true.
Too.
I mean,
you got bad credit, you got to pay.
Deal.
You gotta pay. You got
Visa, MasterCard, who are just darlings in Wall Street's eyes, that are 24, 25%. So I mean, if Upstart's willing to, lend money to the person who doesn't have a job, maybe they should be getting 36%. So we're sorry, Upstart. If you're going to lend money to the people who don't have jobs, we need you out there. We need the odd loan shark.
All right, let's go to Upwork. Q3 adjusted EPS here at 21 cents, beats the 10-cent estimate. Revenues of 175.733 million, beat the 168.193 million estimate. They do see fiscal year 23 adjusted EBITDA at 67 million to 71 million. EPS at 16 cents to 18 cents versus the 16-cent estimate, and approved 100 million share buyback program. I'm so sick of these buybacks, but hey, some more at you.
It's a good pop. I don't think this is one that's coming back anytime soon either. I mean, it's not off nearly as much as some of the other stocks from my all-time high, $64. I had this in the long-term portfolio at 8, and then I let it go. And I wish I still had it. Obviously, it's up at 14 here now. This was back in the summer, or early spring, maybe it was. We talked about it on the show. I let it go too soon. I missed the big gap up on the earnings, but that's kind of my story. I'm always out too early. I take the first bites and then I leave the meat for somebody else. I don't know. It's getting a pop. I'm not chasing. I just can't. It's not in me to chase stocks. And I know it's been working the last few days, but it's just not in me to do it.
Well, last time it had to pop off earnings, it continued, and then look at that, came all the way back down and filled the gap on that. It was really nicely. Who knows if that'll happen this time? We did pop over $15. You can see a daily high at 1547, and then a double top at the 1575 area. So first things first, let's take out 15, and then if you get up in that upper 15 handle, I think you'll find more sellers coming back on the downside. You and I, well, you may fill the gap today if it totally crashes, but the bottom at the top of yesterday's range, 1212. But let's see if the sellers that were out there in August and September, little bit in September, are out there in the $15 handle.
One thing I'd be looking at Upwork is for use of third-party AI services, right? Like who can build your AI, your chat robots. There is some Google trend data. And then, of course, you see on their page a lot of AI services, right? Build custom chatbots, fine-tune your writing, get advice. So
don't all these companies put AI on the front page of their website?
Yeah, but remember what they are, right? This is like hiring like outside source work, right? And a lot of the times, with these AIs, what do you go? You outsource to wherever you can outsource cheap and try to build AI products. So this is why I maybe wouldn't be betting too much against Upwork. But
man, we needed to know this 5 days ago when it got back down to $10. Now it's 14.5. Like stock's up 50% in 5 days, and we need a pullback now. So I agree, Mitch. Maybe throw it on your shopping list. But I just can't chase it. And maybe it's a thing to do. I mean, it has been working on a few of these names lately. The last 5 days, but overall in 2023, chasing has led you to a lot of losses.
Spirit AeroSystem, SPR, more trouble ahead. Where we've been talking about that one. Tuesday
Stock's
said
just an epic disaster.
It had an underwritten public offering of $200 million here, Class A common stock to fund its general corporate needs. The company also announced an offering of $200 million principal amount of its exchange senior note due in 2028. They also tried to push, and they're going to give them an option for $30 million more. It's been really hit hard. I think this is a matter of trying to fix the issues that they have. They need money to survive and fix those issues. What do you guys think here? SPR.
It's just it seems like there's always a headline coming out that knocks the stock down 20% or 15%. It's like the stock that climbs and then boom, gets a bad headline and goes down. I don't know if they have the Boeing problems fixed yet. I'm not sure. I'm not following the story closely enough for that, but I think we just got to be cautious just buying Spirit whenever it goes up. And here it gets a nice rally. And what do? They shove an offering down your throat. So it's just kind of not stock that I'm definitely not going to invest in.
$20 is an area of interest here. You didn't quite get there in the after hours. You got close, 2056. So the bulls are going to be defending that gap area down 327. That's a big move for this stock. So we'll see. I mean, if you're waiting for 20, got another $1.35 to go. Of course, coming back on the upside, a lot of room to the bottom of yesterday's range at 24.15. If you really want to be a cheapie, hold out for 18, but that'd really be a whooping today.
All right, guys. There has been recent issues from the GTF engines, and that's supplied by RTX, but that's for not for Boeing planes. And this is something that I'd take a look at if you're an investor in the aerospace. So just giving you guys a little extra to maybe do a little research on what's going on there. That could potentially maybe help Boeing get some sales next year, as those planes are having a lot of issues with those turbo engines. So take a look into that if you're into the airlines. Definitely something to keep an eye out for. Let's go to Rivian. Rivian delivered robust third quarter performance here, surpassing the Wall Street expectations. And the big thing is focusing on the much anticipated R2 electric vehicle platform. Of course, the R2 would be a lower cost platform to compete with Tesla's hold on the 45,000 to 50,000 EVs. The current timeline for Rivian to reveal the R2 is in early 2024. It came in with a loss of $1.19, beating the loss of $1.32 estimate, and sales at $1.337 billion to $1.327 billion estimate. We'll see what happens here, but production guidance to 54,000 units, citing progress on experience on the production lines and ramp of in-house motor lines. Supply chain outlook not looking too bad here. for Rivian.
The trucks look really cool. I mean, I'm going to
that's
give
a
them,
real truck, right?
That to show the picture. Do you have it on the screen? I'm not.
Yeah, I can bring it up. But remember, that's the R1. So the R2 would be kind of a cheaper version of that. And so that's the thing that I would be looking at, Dennis. I want EVs to tell me that they're going to make a cheaper model, because the way that the financing is right now, I can't be going after that R1 right now. That's what I would be thinking.
I'm going to say something going to shock you, but I'm actually a believer here in Rivian. I think Rivian is number 2. I think it's going to be, I think where Ford and General Motors are obviously struggling to find the way to transition. Tesla obviously didn't have to transition. Rivian doesn't either, because they've been EV the whole time. I think you're going to see always Tesla at number 1. I think Rivian in the EV is going to eventually be the number 2 automaker here. Like eventually Toyota and all of them are going to figure it out. They're going to pass them. But of pure EV plays, I think it's Rivian that's number 2. I don't want to Lucid. I talked about Fisker before. It just hasn't worked out. I still think there's maybe a place for Fisker. I don't know if it's a 0, but a lot of these are zeros. I kind of like Rivian down here. It's a 16. What's the market cap on this puppy? 16 bill. Is that right? 16 billion sound right? Chat, 16 billion I'm getting. Actually seems kind of low from where it was, but obviously it's come down significantly.
Yeah,
here.
it's come down from 28
you could talk me in to putting a starter position in Rivian in the long-term portfolio. That seems insane for me to say, because obviously the company's burning cash. But I think, we're in early. I don't think it's Tesla. It's not Tesla, not Elon Musk, not going to be the size of Tesla. But is there a place where, you look at a Tesla market cap, like just doing this for fun, look at a Tesla market cap at, where the hell is Tesla's market cap? $700 billion. Rivian at $17 billion. Is there a place, where Rivian could get to 30 or 40 or 50 billion market cap and actually maybe grow into that market cap, like produce earnings? We never thought Tesla could do it. They did it. I think if I'm buying an EV play, like one of these smaller ones, because there's like a dozen of them, Neos and all those, I think it's Rivian.
How many vehicles do they have?
So I'm having deja vu here, because this is how we talked on Tesla 10 years ago. Like when we were like, they're not going to take out Ford and GM, and all of a sudden, they are the number 1 producer here. I feel like there are trajectories here, Joel. So how many of you? It's like 57,000, you said, Mitch? It's not a lot.
Yeah,
they're going to burn cash for a very long time.
54,000. But
so you have offerings in your face. You have a lot of things that you're going to fight. But is there a story here? And is there a path to profitability? Because Tesla did have that path to profitability, which we obviously didn't give enough credit towards. I feel like if you're going to if you want to be in this, industry, and you're a big believer in EV, I think Rivian's a number 2. I think Rivian's the number 2 to Tesla in the pure plays.
I think one thing to add to that is that we're not talking about it is their last mile delivery truck, right? With Amazon. And this is from Reuters. I'll give you guys the headline. I read this article a couple of weeks back. This came out on October 18th. But Amazon said that they had 10,000 electric vans in the delivery fleet. And you can see it right here, plugged in, ready to go. And that's the future, man, especially Amazon that wants to have 100,000 electric delivery vans on the road by 2030. And if they're already using more than 10,000 of these trucks, you don't think they're just going to keep buying more since they're working? That's what I would think.
What do you think? Would you buy Rivian long term?
Yeah, this is not this is one. There's going to be some kind of winners, and you have to take some kind
of. That's what I think
here.
too.
You know what I mean?
There's gonna
nice
be some
pop.
Here.
It's getting a nice pop today off the earnings, up $1.10. You snuck over $19 in the pre-market, going to $19.10, coming in from $28 in July. This really hasn't participated in a recent rally that much, so keep that in mind. A nice target on the upside if you're looking for more here, 1973. And the reason I mentioned that one is because that was a bad day. It peaked at 1973, settled near the bottom of the range at 1809, and then that's when really the catalyst to take it down to $16. So little ECT, not much of a gap. Well, there is a gap there, but let's see. If you're looking for more, that's $1.20 away. First things first, though. You got to clear the 19, and that's a pre-market high. You're 50 cents away in Rivian.
So Spinner's got a point here in the chat. I just want to continue this discussion. Joel's going to give us the numbers here, but it's like a call option. It is. This is speculative capital. This could very well be a zero. Rivian could be, but I don't think it is. I don't think Rivian is a zero. And I don't think Fisker is a zero either. I don't think Rivian or Fisker is a zero. But the market cap is low enough now that the upside, when the market cap was 100 billion, your upside just wasn't enough. Now the stock has come down enough that the upside maybe makes up, because I think Spinner's saying 4 times, if Rivian can really become the number 2 EV, automaker, it could even be higher than that. It could be 5, 6, 7 times. I don't know if it's a 10 bagger because that'd be $170 billion market cap, but could this get to a 70 or $80 billion market cap if, they really, figure it out? I think it's possible. I believe in Rivian. I believe in the trucks. I believe in the management. Actually, they're on CNBC right now too. A CEO's on CNBC. I think there's a place here. The question is, should you maybe wait till mid? I still think recession is coming, and maybe people aren't going to have the money to buy this stuff. But this is a luxury purchase too. There isn't like your majority of people are never going out and buying Rivians. Like, what are these things worth, Mitch? Like, what does it cost?
The R1, it's definitely up there. It's in the 70s.
Rich people are buying this stuff. Well, rich people.
That's
are
why
rich
they're trying to make
what.
the R2. That's why they're trying to make the R2 down to 45, 50, right? And slowly work their way down, right?
I got the Canadian MRSP. It's $86,000 to $140,000. This is a luxury truck.
Yeah, not too many people can buy this. Let's be honest.
So they're expensive, but you know what? Rich people are. This is such a high ticket. So you have stuff that's high ticket. Here's an argument here still for Rivian. You stuff like automotive. I'm going to buy a new car because 40 grand. Well, that's because the majority of the population is trying to get to that. Majority of the population is never going to be able to afford a Rivian. So they are a luxury auto producer. The question is, can they get to so during a recession, the rich are still rich. They'll still maybe buy those, maybe not if their stock market wealth goes down because that pisses them off. But I think Rivian actually I kind of believe in it. So I can't believe I'm saying it here, but I don't mind it here at $17 billion market cap as, like Spinner says, like a lottery ticket.
Now, one thing I would say is if the consumer is paying for the Rivian, what happened to the sleep number, man? Because it didn't seem like they're paying for the beds out there. Let's get to sleep number here. Is their earnings, disaster stock of the day, EPS at a loss of 10 cents, misses the 17-cent estimate. Revenues of 437 million, missed the 511.816 million estimate, and also seeing fiscal year 23 EPS up to a loss of 70 cents. SNBR.
Wow. People aren't buying beds. They're not going and buying new beds. People are, and I don't know if you're financing this stuff, but I pretty much guarantee it isn't 0% financing.
A lot of them finance them because it's
like what's these sleep number beds cost? So this is like the Generac, it's like all the solar stocks, all the same stuff, falls in the same category. That this is big ticket stuff that people don't need to absolutely replace. Sleep number cost. Bed cost. Google. What do these things cost?
What's Google say? $879 is where you got to.
$1,100. Some of them are $2,700. Some of them are $4,000. Man, I just can't even imagine. I think this is just not the place to be, especially with the coming recession.
Wow, this is way below the COVID low. The COVID low was 1527, and on that spot, this has been a little volatile puppy, as I like to say. You got to 879, then you got a nice pop on that, but you're leaking once again. So that's the only number I can give you there is 879. That was your after hours low in sleep number.
I don't think these are the dips you're looking for. We're looking for, so when I'm putting the buy the dip hat, good companies with little debt that they're financing, that the customers don't need a huge amount of financing to go buy their products at reasonable valuations. That's what we want. So let's write down the checklist right now. I'm going to write it down. So you want good companies. This isn't even one of those. Reasonable valuations.
You get a little chalkboard out.
And we want low debt. And we also want, this is the essential, the most important one. Customers do not need financing to buy your product. Your customers need financing to buy your product. It's not going to continue to do well in 2024. It's a reason that all these stocks and the IWM and all these other companies continue to go down. It's a reason solar continues to go down. Every pop gets sold. because their customers need financing to buy their product. Their customer needs financing to buy your product. It's probably, not the place to be. And people argue, well, what about Rivian? Well, people buying Rivian are rich. So it's just a little bit different, animal there. But overall, I still don't like autos. I'm not saying I'm buying Rivian here today. Bring it back to the Rivian conversation. But I'll tell you, I'm definitely not buying Sleep Number.
Sleep Number. All right, let's go to our guest. All right, we are joined by Jeremy Schwartz, Global Chief Investment Officer at WisdomTree Funds, joining us here on Premarket Prep. Jeremy, how you doing today?
Good morning, guys. Enjoyed the conversation to start. I've got some good comments on a lot of what you talked about. So
Continue.
Let's
Please
go.
continue.
Let's go with that.
Go wherever you want. Take over, Jeremy, wherever you want to go.
Well, we can a few different ideas. On this idea, let's just continue, Dennis, your latest thread. Actually, two of the things you talked about, I had things I thought I could bring up. But if you go back to your checklist, good companies, reasonable valuation, low debt, customers don't need financing, and then sort of as a combination of you talking about Rivian for the EV stocks.
It's a bad combo.
No. Here's my play that gets it's one of my favorite places in the world. I've talked about it with you all before, but DXJ, which is our Japan ETF, is symbolic of all that. It's got a 10 to 12 PE, so it's like some of the cheapest stocks in the world. So very reasonable valuations. You got the largest holding is Toyota. All right. So I know we talked about Japanese. All right, are they the pure play EVs? They're behind on EVs, but they're actually doing a lot of interesting innovation. They're actually a very strong place for intellectual property and patents. They haven't been always great at commercializing other ideas, but a lot of interesting innovation. I wouldn't count out Japan Inc. as a player. And so they got good companies, reasonable valuations, not just low debt. They're like the cash-rich country of all companies. They have so much cash on their balance sheets. And if you need to do financing, their central banks at negative rates still. They still have sub 1% on the 10-year. And so, you got this, you used to have this, there is no alternative because bond yields were so low. Now you got 5% 10-year in the US. There's 10-year still below 1%, so there's this huge equity premium. So I think DXJ is part of the answer for your play, and it'll diversify your lottery ticket with Rivian.
Yeah. Well, there you go. I'll do a little bit of Japan, a little bit of Rivian. I'll be like Kramer. I might diversify. Certainly.
That's a
what
nice
else
looking
do you like?
chart.
Give us more ideas. I like the Japan idea. Give us more ideas, Jeremy.
It's performing like an AI stock. I mean, we have 80 ETFs in the US. It's our second best performing ETF this year. So it's performing like mega cap growth, but it's not mega cap growth. It's sort of like deep value for international. So I think that to me is one of my top ideas. There was a question I saw pop up about the low interest rates. There's also this question of should people go hedged or unhedged. DXJ is one of the hedged ETFs. You don't have currency in it, which actually is a benefit. If you compare a US investor buying DXJ to the local Japanese investor, the US investor is actually getting 6% more than the local Japanese investor. Like, how's that working? Well, because when we hedge the currency, we are paid the relative interest rate differential. So the Fed at 5 and their central bank at negative, and you roll these forward contracts so you don't have any currency risk, you're getting paid 5 to 6% on top of the local market return, which is saying other ways, if you go unhedged, you got to see the yen go back to 140 from 150 just to break even with the hedge. So I still say this is like the Buffett trade when Buffett bought his 5 stocks, which are all in our top 20 holdings, a lot of them are in the top 20 holdings. He did it with a currency hedge. He issued debt in yen. He got this cheap financing, basically the same trade that we're making in DXJ. So I come back to that all the time, that this is the way Buffett's buying Japan.
That's interesting because I remember when there was a lot of talk about what Buffett was doing over there in the Japanese markets, and then you look at that ETF and it's doing well. What was the other topic you wanted to hit on before we go into some other things?
Sure. Dennis started off the show saying his long-term portfolio added SMCI, one of the AI stocks, believing in AI. That is one of the things we believe in as a theme. I mean, I think it's often hard to pick the winner. I mean, this is sort of WisdomTree approach in general of buying ETFs versus a different thing. But we have WTAI, which is our diversified basket. It had been up almost 40%, and it's pulled back. So talking about pullbacks, the way we have structured it, we're working on rebalancing it at the moment. So we'll have some updated portfolio holdings in a few weeks. But essentially, we have about 40% semiconductors, 25 to 30% software. There's like these innovators of who's really using it. So you get some of the big companies there. And then also just sort of other hardware. And there are actually some plays on well, there's some robotic plays. There's also like, cars who are going to do automated driving, have some AI hardware components to them. So it's sort of a diversified AI story. We're believers in that story long term. It's had a very, pretty significant pullback from its highs. And so I think that's an interesting one as well.
I'm trying to just look at your holdings. I just went to wisdomtree.com, looking up the holdings in there. So looks like AI chip technologies. I don't know that. Is that not a U.S. company? AI chip technologies.
Yeah, it's a Taiwan company. You get a lot
Taiwan company.
You do get a lot of.
That's the number one holding. So I don't know that one. Nvidia obviously is number two. Meta, Synopsys, Cadence, AMD's in there. Microsoft, Taiwan Semiconductors in there. Alphabet. You have a lot of stocks in here. Holy.
It's about 75. It's not as many as some others, but we'll rebalance it in a few weeks. So
here's an interesting one. What about WTAI? The WisdomTree artificial.
That's what you're talking here.
Yeah, that's the one you guys are looking at.
This is their fund. We got the WisdomTree guy on here. It's his fund.
I'm watching them right now. I'm looking them all up, right? I mean, there's so many here that you guys can take a look at. You guys cover a lot of mega trends also.
Yes.
Which is really interesting, right? There's cybersecurity, battery value chain and innovation. That's WBAT. What about that one? That's an interesting one, especially now that we're getting some discount in the EV space. What would we find in WBAT?
It's a play off of that EV stories. I mean, talking about Rivian and who's going to benefit from that. This was the idea that EV is going to be a big part of the world, and this goes through all sorts of that value chain for batteries. So it is sort of a derivative of the Rivian story that we were talking about as well. So it's global companies. There'll be some miners. There'll be people who are producing batteries. You'll have some of the EV companies in there as well. So that's all tied to the same story. I think the AI play that I'm interested in as well, it's sort of, I mean, you don't think of it as a direct AI play, but you think about who's going to benefit from all this innovation and who's actually really lagged. Biotech, we have WDNA, which is in that megatrend family called BioRevolution. We see a lot of uses of the technology for biotech companies, and we think a lot of new innovation is going to come because that's one of the most data intensive sets of research out there. And we see sort of gene editing happening in things beyond healthcare. So there's even some energy plays in there. There's some food, agriculture type plays in there. And so it's an interesting one. It's actually been one of the best performers just recently. I want to say this quarter, it started to act a little bit better, but it's obviously been a very tough spot. So I think that's sort of an interesting longer term theme.
All right, we'll take a look at that. Let's shift gears here. I can't remember the last time we had John, but the great interest rate debate here and the dovish tone, the market interpretive. We've gone from such an oversold, bad condition, now potentially overbought here, back up at 4,400. Who would have thought that just a couple weeks ago? Talk to us about Q3 earnings and then your outlook for the year-end rally and interest rates.
Yeah, earnings have come in quite strong, actually. I mean, when we look at the expectations coming into the quarter, we have a tool on our website called the Path Tool. It's got all sorts of indexes that you can track sort of on a free basis. You just sort of log in and can play around with it. And we sort of show what the estimate before the earnings season starts. We show what's estimated, and then you show like as things are coming in, how much is reported, what that's at, and then sort of what's the surprise factor. And coming into the quarter, it looked like earnings are going to be down on the quarter. My site this morning shows earnings up 5% for the S&P 500. So it's actually come in way stronger than people thought. Sort of an average surprise. We've got about 87% of the S&P reported. Average surprise of 8%. Tech, we put a expanded tech that has things like Amazon and Netflix and Meta and Google that went away from just the official tech sector. So there's about 73 companies in what we call the expanded tech sector. They've had earnings growth of 28%, so they're off the charts. What's really dragged the S&P has been energy. If you did S&P X energy, and energy is only like 4% of the market, but that 4%, the earnings have like really been negative on the year, and so you take energy out, and the earnings growth is like 10%. So it's been a it shows you how impacted one sector can drag the overall number down. But so I'd say in general, it's been a good season. And, I think so much of the market has just moved on interest rates. I mean, certainly saw the market rally significantly when the 10-year went from 5 to 450. If that 450 went back to 5, I think that you do have a little bit pressure again, potentially. And it's certainly impacting small cap stocks. We talked about some of the business issues. They also are the only ones paying the higher borrowing costs. They have rates resetting because they do a lot of bank loans. So it's not like the large caps who issued extended maturities and aren't paying these higher rates. We did a chart of the net interest burden that is being paid by large caps. It hasn't changed at all. The small caps, though, 130, 140 basis points, they're losing margin for these banks resetting their rates. So that's one of those impacts of small cap earnings, way worse than large cap earnings. But we somewhat think the market's reasonably priced, given all that's going on and earnings season coming in pretty well.
Are you worried about that? The concentration in the Magnificent Seven. I mean, one thing that Dennis talks about is you look at those 7 stocks, you look at the S&P, and then you look at like something like the IWM just muddling between its COVID low and its late 21 high here. Are we ever going to see that great the major rotation where we get these small caps joining? Perhaps lower interest rates would happen, and so is it bother you that what we're seeing with the concentration in the Magnificent Seven?
Well, it comes back to that earnings story I just said. I mean, those companies grew earnings 30%, or just the tech sector in general, not just the Magnificent Seven, but the tech sector in general has grown earnings 30% when the S&P was basically 5. And so, they have when we look at that expanded tech sector, this is another thing I show on a daily dashboard every day, the PEs of the tech and the X-tech, and the tech is about 10 points higher than the X-tech. So yes, they are more expensive, but they're delivering the earnings growth. So the real question will be, when do earnings start meaningfully disappointing? And until that happens, they can command the premium. Now, the X-tech basket you can say maybe it's too low. At 15 times, it's below their 30-year average. And so people get a little bit pessimistic, and often things are a little bit brighter in the future than they get in some of these value sectors. And I do like value long run, but right now these tech companies are delivering on the earnings. So it's until that narrative fails, they're going to keep going.
They're the only ones that have delivered on the earnings, really. When you're looking at this last earnings report, there was disasters in the cyclicals. I mean, the oil and gas stocks, but they've been priced up quite a bit here. But for the most part, it's been tech that has been consistent. That's been where the consistent earnings have been, and that's where the investors are going to continue to stay, because one, it's the story, and then two is it's technology's in everything. So I mean, it's hard to really come up with the thesis that technology starts to lag.
I'll give you one little thing I think is happening. I put a piece out earlier this year saying around October we're going to have very good earnings. And you say, well, how did I know that? And you say, was that right? The dollar has a very disproportionate impact on earnings, particularly for tech. Tech is the sector most exposed to foreign sales. Okay, now it's partly why I said Japan's beating earnings by a lot because the yen is so weak, and when they translate dollar revenue back to yen, they make a lot more yen, and so their earnings are going up a lot. Well, the same thing's happening with a weak dollar, and it often happens in advance. Now, what happened was the dollar, and usually when I did some of the analysis, is like 6 months later after the dollar change is when it starts to show up in earnings in a more meaningful way. And so I said October is going to be when you start seeing real good earnings. So that's what we're seeing right now. The dollar started turning around, though. So you might see, if I had to guess, as you get into April, May, you might see a little different story. And you might see, because the dollar's been strong of late, and so that could actually pressure some tech earnings, you might see more disappointments. And it's amazing that analysts don't factor this in as well. I think that's one of the things. It's hard to fully get this factor and for like tease out what is the dollar impact and not. It's not easy to get this. This was just my high level macro take on it, not a company by company take on it. It's not easy to do the company by company take. But my sense is you'll get a little bit of pressure, and the analysts don't factor this in that well, which is why I think you're getting the beat right now. And I think it'll be 6 months from now, it'll be a little bit trickier.
Okay, we'll be looking out for Q1 and Q2 earnings next year. We'll see the lag dollar effect. We've been joined by Jeremy Schwartz, Global Chief Investment Officer at WisdomTree Funds, covering a lot of things here on Pre-Market Prep. Jeremy, great conversation as always. We want to have you back on again real soon.
Always a pleasure.
Thanks, Jeremy.
All right, let's get back to the markets. How we looking, Joel? We still on the climb?
We're just quiet. We're up $1.25 and just hanging out near 4,400. 8 days. I mean, 8-day winning streak. I mean,
we know what matters, right? How's the TLT doing?
Quiet.
The bonds
Quiet
are pretty
today.
flat. Yeah. I mean, as long as they're not getting killed.
We started sneaking up here though. We were only up about 20 cents. We're up 50 cents now here. So TLT had a fantastic day yesterday. I mean, that was sneaky there too. I think you got to look and say, can it take out the high from 2-3 days ago, the 89.05? That would be the next major resistance. Then you start thinking above 90. But I mean, IWM was down most of yesterday. It tried to come up towards the end of the day. So you did see a little bit dispersion there where I've been saying the TLT rallies, IWM rallies. You didn't see that yesterday. So one of two things is IWM is going to catch up, or that means that IWM thinks that the rates are going to start to sneak back up again.
Yeah, we got to pause. I mean, very nice rally. What happens after big moves, either up or down? You get a couple days of digestion. The digestion is, the buyers are not going away and the sellers are still out there, maybe taking some short-term profits. But psychological 4,400 level, yesterday's high, 03.25, 01.25 is our current high. And we got some Fed speak today. So early to tell.
It's time for the Hood report, right?
Oh gosh. All right. Well, I laughed.
Oh man, I have some fun sometimes, guys.
Yeah,
Q3 EPS at a loss of 9 cents beats the loss of 10-cent estimate. Revenues here of 467 million, missed the 478.45 million estimate. Monthly active users decreased here 16% year over year to 10.3 million. They do see fiscal year 23 expenses at 2.399 versus 2.439, and prior was given 2.33 and 2.41 billion. The Hood coming on down.
I mean, retail traders have really been hurt. We're all the AMCs and the GMEs and all these meme stocks and all these high short interest stocks and all these storied stocks of 2020, like the Upstarts and the Affirms. They've all just been crushed. All these stocks have been crushed. The only thing that worked was investing in mega cap tech. And if you were invested in mega cap tech, you did okay. If you were invested in the Qs, you did okay. Invest in SPY, you did okay. You did really bad in a lot of other stuff. So all those storied stocks, those Cathy stocks of 2021 have been crushed, and retail got crushed along with them. And like I said, I don't believe it's all retail traders. Like I said, I think we have a lot of excellent retail traders in our chat room. I think we have a lot of excellent retail traders still out there that we don't even know about, but there's a majority of these retail traders, believe it or not, that have really been hurt. So where you're seeing some, and like I said, I had the one friend, and he was looking at his other, one friend from Bright Trading who was talking with the retail trader, and the gentleman was down 90% of his portfolio, and he had all these stocks in there. And I'm like, I wonder how many other people are out there that are full of GME and AMC and all these Upstarts and all these other Lucids and all these other EVGOs and all these storied stocks from 2020. I wonder how many people are just loaded up with all that junk. I think it's more people than you think.
Pre-market low. They really hit this thing. Let's call it an after hours low. 881. But I think the dailies are your key here, because you did have the big boys stepping up, or traders stepping up at the $9 area. They got a little pop. They were hoping to get over to 10 today. That's not the case. So very important for this to put a similar formation in here that it did at the end of October, at between 880 and 9. So down trading 600,000 shares. So looking at potential support in that one. And then the close, the mark 976, a bunch of highs at the 975, 980 level if they decide to take this green on the session. And maybe next quarter will be a little bit better for them since we did get, some pickup in trading activity as of late. So maybe next quarter things will be a little bit better for Robinhood.
So John mentioning in the chat here, and I've been watching the same thing, John Lagrisly. I've been watching Unity all morning here. There has been a seller of all sellers in this stock. So Roblox blasting off. You would naturally think, take two too as well, blasting off. So two gaming stocks, which Unity provides software for these games, blasting off. You would think Unity would get a sympathy move. It has not been allowed to have a sympathy move this morning because there has been one seller with an iceberg order at 2680 I8 for the last hour. I've never seen one that big on Unity before. So the volume right now on Unity is 648,000 shares. Almost all of that was sold at 2688 by one institution. So if you look, you didn't get the pop, and I was like, what is going on with Unity? Why is it trading so much? It was trading because Roblox at 8 o'clock had earnings and it traded up. And they were trying to lift the offer. They've been trying to lift the offer at 2688 for the last hour, and it has not moved. Finally, it has moved. Does that release it, and does that allow the stock to actually go up here now? I don't know. Maybe the seller comes back in. Maybe they have more. But that seller at 2688 sold 600,000 shares there. Do the math on that, Joe. What's 600,000 times 30? So times 3 is 1.8 million times
18
million. $18 million worth of stock. They sold $18 million worth of stock there. So somebody wanted out. So watch Unity now that the seller does appear to be gone. We don't know. Seller might come back in. Maybe they just come back and they have more. Who knows? But they've released it for now. But these iceberg orders control the market. I mean, you get one big institution. That institution did not allow this stock going up. So you have a bazillion day traders now that are long this thing, though. So that is a concern that a bazillion day traders would buy this saying, this thing should go up. And it should go up. And it would have went up. I think Unity would be up $1 right now if not for that seller. But because that seller was there, and I have a lot of day traders crowded long on this thing. So I don't know. It's going to be interesting to watch this stock today. There's going to be some big moves. And then Unity has earnings on Thursday. So that'll be important as well. We know the stock got hit hard when they put that, fee in for the software use. Did that knock their numbers down? Like, do people say, screw it, I'm not going to use Unity because I don't want to pay that fee. I'll use something else. I don't know yet. So there's some interesting, stuff to think about here. Some balls to juggle. I'm still long Unity in the long-term account. It's been a disaster.
All right, last thoughts, Dennis. A quick little wrap up for us. What will you be looking at today?
Watching Unity for sure. I think we're still just in digestion. I think to Derek's point yesterday, who made some excellent points on this show from T3, we're so far so good for the bulls. We've had a huge move, and we really didn't give any of it back. I mean, a little bit back on the IWM, but the S&P is holding in well. You're seeing some of these other stocks that had big moves. You usually see 10% moves up, then you have a little check back. We haven't had the check back. So that's the good news here, is that the bulls are still in complete control. Digestion up here would equal going higher. Seasonality in their favor. There's a lot of reasons to still be short-term bullish, despite me looking at 2024 and saying it may not be as easy.
Real quick, Pablo has been asking for PayPal for the entire show, and I'll just say,
my boy Pablo.
He's been consistent. So, I mean, good support. Hanging in here. 54. I mean, it's hanging in at 54. It's up a nickel, building us some support here. You would sure like to see it get over 56 and hold, but right now, keep an eye on $54. Digestion mode here. Got some Fed speak going on today as well, so we'll see it moves market. We got the high close of the move yesterday, series of higher lows, 7-day winning streak. Let's make it 8, and then tomorrow, 8:15. We'll talk to Mr. Mark Chaikin, see what his outlook is on the market. So everyone, have a great day, and we'll talk to you soon.
All right, Joel Condon's out of here. And of course, you guys can keep up with Dennis Triple D Trader on Twitter. We'll wrap up here. Like always, guys, catch us up next. We got live trading coming up. And I did want to give a shout out to everybody in Ohio. If you guys don't watch our cannabis content, of course, we have Cannabis Insider. We had the Dales Report, and they were all talking about this situation that just happened. Of course, Ohio voting to legalize possession and sale of marijuana. So pretty interesting results there. 57% said yes. And we're going to continue to watch to see what happens in those situations. Of course, the HHS recommendation. Will the DEA reschedule cannabis? All things that you can find out on Cannabis Insider and the Dales Report. If you don't watch our cannabis content, I think you might be missing out on a big opportunity that could be coming in investments. Smash the like. I'll see you guys over on live trading. And let's keep going, team. There's always much more right here on Benzinga.